Finish copying? Yes or no? Can I proceed? Write down. Those are not copied, raise your hand. Write down. Here, continue writing. Here, the exchange is, counterparty for, 12 buy contracts. Here the exchange is counterparty for 12 buy contracts. In bracket, who and who? A and C. Here the exchange is counterparty for 12 buy contracts. In bracket, A and C. And 12 sell contracts. And 12 sell contracts. Who are 12 sell contracts here? It is who and who? B and Y. 12 sell contracts, B and Y. Everybody following or not? This is open interest concept. Can I have a notes or not? Write down notes. Write down notes. Concept, that is, write notes. Point number 1. Point number 1. In share market, point number 1, in share market, how the shares are traded? Question mark. In share market, how the shares are traded? Question mark. That A, point A. A company goes for IPO. A company goes for IPO. For example, A Limited goes for IPO. For example, A Limited goes for IPO for 10 lakh shares. For example, A Limited goes for IPO for 10 lakh shares and get it listed in the stock exchange. A Limited goes for IPO for 10 lakh shares and get it listed in the stock exchange. Continue. Now, same point you continue. Now, open interest for 10 lakh shares is created. Now, open interest for 10 lakh shares is created. Now, open interest for 10 lakh shares is created. Everybody follow what I am saying? Next, point A or B? B. Point B. In the secondary market, the investors will be, buying and selling these 10 lakh shares. The secondary market, the investors will be buying and selling these 10 lakh shares. The investors will be buying and selling these 10 lakh shares. So I elaborated, means what? Trading in the 10 lakh shares is a meaning. Will be buying and selling these 10 lakh shares. Full stop. The ownership of the shares changes hands. The ownership of the shares changes hands. The ownership of the shares changes hands. But what remains same? Open interest remains same. The ownership of the shares changes hands, but open interest remains same. Everybody understanding it or not? Now, point B or C? C. The open interest can be changed. The open interest can be changed only when the company issues new shares the open interest can be changed only when the company issues new shares or buyback its existing shares. Only when the company issues new shares or buys back the existing shares. Or buys back the existing shares. Or buys back the existing shares. Continue. In other words, in share market, only the company can. Only the company can what? Influence open interest. In share market, only the company can influence open interest. Only the company can influence open interest. Everybody, are you following or not? Next. Point number 1, over. That is how the company shares are traded. Now we're going to go forward. Point number 2. Understanding. Point number 2, right? Switch on the AC. Point number 2. Understanding open interest in futures market. Understanding open interest in futures market. Understanding open interest in futures market. Can I proceed? Write down in that A. Futures contract are not created. Futures contract are not created. Fill in the blanks. Are not created by whom? By the company. Futures contracts are not created by the company, but created by investors. Futures contracts are not created by company, but created by investors. Everybody following or not? Next. Point B. When a future contract is entered into between two parties, when a future contract is entered into between two parties, when a futures contract is entered into between two parties, the contract can be classified. The contract can be classified into 3 types. When a futures contract is entered into between two parties, the contracts can be classified into 3 types. The contracts can be classified into 3 types. Branch it into 3. First branch. Both parties creating new position. First branch. Both parties creating new position. Both parties creating new position. Both parties creating new position. Everybody follow in order. Now I am already not short, now going long. I am now creating what? A new long position. I am not already long, going now short. I am creating what? A new short position. So both parties are creating what? New position. Second branch. One party diluting his existing position. One party diluting his existing position and another creating new position. One party diluting his existing position and another creating new position. One party diluting his existing position and another creating new position. Another creating new position. I want you to answer whether you understand or not. Tell me in this day 1 and 2, what is the example for that? The day 1 example here, C and X. X is diluting as existing by position, by becoming a seller, but C is creating what? A new long position for himself, yes or no? So one party diluting as existing position, another party creating what? New position. Third branch. Both parties are diluting. Both parties are diluting existing positions. both parties are diluting existing positions. Both parties are diluting existing positions or existing position. Can you tell me an example for this? Y and A. A is a buyer, is becoming what? Seller, diluting his contract, and Y is seller becomes what? Buyer. Both parties diluting their existing position. Go to the first branch. First branch, tell me what happens open interest? No change, the increases or decreases? The increases. Right, then open interest increases. First branch, right? Open interest increases. Open interest increases because new contract created. Open interest increases because new contract created. Because new contract created. New contract created. Bracket la something similar to what? IPO. IPO la company issues new shares. Here we create what? New contracts. Something similar to IPO. Something similar to IPO. I don't call as IPO. I think something similar to what? IPO for understand, that's all. Something similar to IPO. Yes or no? Now, second branch. What happens here? Existing dilution. Another person what? New contract. What happens here? No change. Write down. No change in open interest. Second branch. No change in open interest because. No change in open interest because contract changes hands. No change in open interest because contracts changes hands. No change in open interest because contract changes hands. I as a buyer come out, you come in my place, you step into my shoes. Yes or no? The contract changes hands. The contract changes hands. Don't make it right? It is what? Secondary market. I don't say similar to. It is what? Secondary market. It is what market? Secondary market. It is secondary market. Okay. Third, both are diluting. What happens here? Both are what? Diluting. What happens here? Open interest decreases. Third case, open interest decreases. Open interest decreases. Can tell me it is something similar to what? Buyback. Write down. Something similar to buyback. I don't say buyback. Something similar to what? Buyback. Now buyback, like company is the issued share, is buying back the share. Person bought the share as what? Sold the share to company, na? The dilution take place. Something similar to buyback. Something similar to buyback. Everybody, yes or no? No. This is the concept of what? Open interest. Enna clarity irukka? Now, see. Anybody having that sheet which I gave you last class about? Okay. Please don't talk. One minute, please. Let us understand how to read the sheet. Then we can just go for problem areas. Really, we're going to go for the problem areas. Till now, I discussed introduction. I discussed only what? Introduction to futures. But in this, in second previous examination, something around 7 mark question has been asked in what? The initial margin, maintenance margin type of problem. Okay. So all these are in the syllabus. So it is as good as introduction. Now later I'm going to start with the pricing of futures, arbitrage, hedging and all discuss in the next stage. Can I proceed or not? Now, just quickly let us see how to read this particular content. Rumba simple, yeah, nothing great. Once they are familiar, it becomes what? Very simple. Please. Shh. Now, this is a quotation taken on 28th February. What date here? 28th February. Now please read it. What date? 28th February. It is from the website itself. It has been what? Taken. Okay. At what time? That is 15:59. Means what? 3:59. 3:59. Around what? 4 o'clock. Please. Shh. Okay. That is market has closed. Other meaning. Market has what? Closed. In fact, I downloaded at the 6 o'clock or 7 o'clock. Okay. So you don't put 7 o'clock, 8 o'clock because after the time market gets what? Close. Around 3:30 to 4, the market normally what? Close. There is a quotation taken at that particular time. Can I proceed or not? Now, see, take the calculator. Take the calculator. Work out, okay, please. Shh. Now, don't spend too much time. Let's complete it quickly just to have a feel of it. That's all. Nothing more than that. Like that, we'll discuss the options also later, how it is traded after completing the interest rate option, etc. No. Please. Shh. Now, see, when we go into that, the security we are discussing is what? Tata Consultancy Services Limited. So this is the, and that is asset on which we are discussing the quotation. Please. This share is trading in BSE as well as what? NSE. Every share will be having a code number as well as what? The sector. It is what? IT software. They give the sector wise breakup. Okay. Now, in BSE, the share close on the day. How much rupees? 2,272.8 rupees. Is the closing price of the share on BSE. 20th February closing price. Yes or no? That means the last trade has occurred at this particular price. Is what you can understand it. Now, next is change is 4.14%. It should be have been from what? The previous price. Okay, that is not here. Can I proceed? Now, change is 98.4. How much percent? 4.14%. I can say like this. Previous day, it should have closed at 2272.8. Okay. 2272.8. Now, change. In that case, it was, in the printout did not come here. They'll say either show green or what? Red. Green upper arrow mark. That means what? Down arrow mark will be shown. Okay. Now, printout I did not get it. Leave it. Okay. So it was green only. It is what? Green only. TCS has mostly green only. Can I proceed? So, I said the truth here. Can I proceed? Now, in that case, is how much here? Minus 90.4. Just to confirm it, minus 90.4. Yesterday it closed at what? 2182.4. Now closed at what? 2272.8. Yes or no? Now, you have 90.4 divided by 2182.4. will be giving how much percent? 4.14% as the change. Like this, the change would have been calculated. Yes or no? No. This is cash market, futures market, cash market. Today how the share close. Like BSE, the same TCS is selling on what? NSE also. It is almost near price only 2275.75, and this is going to be the change. Everybody up to the stick marks. Are you following what I am saying? No. So this is the price in which market? Cash market. Now, then what happens is, you will be having two boxes, pop-up boxes. One is futures, another is what? Options. Okay. Now, whichever code you want to see, there you have to go and what? Click it. Okay. I am just saying live. Okay. So, you go to what? Futures, and then if you click it, you will be getting this particular table. You will be getting this particular table. This is the futures table. Can I proceed? Now, see. In this, there is a downward pop-up box. Yes or no? Inga TCS, there's a 27th March 2014 contract will be there. Below that what? 27th April will be there. May will be there. So what contracts are available will be there inside this drop box. Everybody following what I am saying? Now, I just clicked what? A futures contract expiring on what? 27th March 2014. For that only these numbers are applicable. So no. If I click some other thing, I'll be getting what? The other contract detail. So I went into the options as a future segment, and this is TCS. Already we just seeing the company share price and futures only. In that, I'm discussing about a contract which is expiring on what? 27th March 2014. I'm not there discussing on 28th February. Yes or no? Now, what was that contract details today is the issue. February. Yes or no? Now, look at this. Number one. The contract name is what? TCS. It is what? Futures stock contract. FTS means what? Futures. They'll write what? OPS means what? Options. Future stock contract. FU stock contract. And it is expiring on what date? 27th March 2014. Yes or no? Now, the contract price is now how much? 2,270. Now, this is taken from NSE. This is taken from what? NSE. Okay, I'm not taken from B. Is taken from what? NSE. Email I should see only the NSE price. Now, tell me, what is the NSE share price? 2,275.75. What is the meaning of that? If I want to buy the TCS share today, I can buy how much rupees here? 2,275.75. Want to sell, I can sell it what? 2,275.75 is the price in the cash market. Yes or no? Now, the same TCS share, if I go for a long futures or sell futures, suppose at this price, I agree to buy or sell on what date? 27th March at this price. Yes or no? Now, my question is the TCS quoting at premium or discount? Premium, because stock. He can even quote at what? Discount. If it goes at discount, we call as backwardation. Premium means what? We call as contango and so on. We'll discuss that later when we discuss about basis, etc. Are you following saying? Now the thesis is called what? Premium. Because forward can be a premium or what? Discount. Yes or no? Now, so what is spot price? 2000? So 2000? Okay. What is the forward price? 2270. Everybody say calculator or not? Minus 2275. How much is 75? What is that? 2.25 is a premium on the what is spot price here? 2275.75. If you put what percentage? Just a minute here. Please. 2278 minus 2075.75. It is 2.25. The premium how much here? 2.25. They express a premium as amount, not as what? Percentage. He is quoting a 2.25 premium. Respond yes or no? No. Next. Change now from the previous day, because how the share price, they compare the change of yesterday and today. Yes or no? Always they want to know how the prices are moving. This change is what? Compared to previous close, how the futures are close to what? Today. And then we can also what? Change. Now, look at this. Previous close is how much? 2200.15. Yesterday, the last transaction took place. How much futures price? 2200.15. I have seen the calculator 2200.15. Now it is closed at how much? 2270. What is the change here? 77.85 is a change in the price. Yes or no? Now compared to yesterday, today it closed upwards by how much? 77.85. So in one day it has gained by how much point here? 3.54 percentage point has been gained. Yes or no? Now because always market analysts would like to know what is the percentage gain one has made in this particular transaction. Everybody follow what I am saying? Now, so we know this is a TCS futures expired on what? 27th March. Its type is what? Stock futures. What is the current price? 2278. Today it closed at what? 2278. Last transaction what? 2278. Change is what? 71.85 compared to yesterday's close. Are you following what I am saying? And the percentage change is 3.54%, and it is trading over the stock exchange price. So how much here? 2.25 premium. Up to this first row. Are you following or not? Now, next is come to the other details which they want to analyze. Okay. Now, yesterday closed at how much? 2200.15. What closed? TCS shares or TCS futures? TCS futures. All are futures. So no. Now, today opened at what? 2182. Don't get confused like a bank account. Last day closing balance, today what? Opening balance. I am not discussing about account. I am discussing about what? Transaction. Yesterday last transaction, what is how much? 2200.15. Today when the market opened, the first transaction took place at 9:30 at what price? 2182.9. Yes or no? That is, over the night, some information would have been come about TCS. Or some news would have been raised. So tomorrow morning, people are not willing to start at this price. They start at what? A lower price. Yes or no? Now, daily the market may open on high or may open on what? Low. Entire market can open on high. If some good market for news for what? Entire market comes. Or if a good news comes for what? A particular stock also the market can open on what? High. It can be opposite also. News category. Today the market opened at what? High means all of them started giving what? Orders at a higher price is the meaning. Now, so don't think the last day closing price should be what? Today's opening price is the first trade that took place in what? Today morning. Like that we can imagine everybody yes or no. Now, next is today highest the futures traded how much? 2288. It dropped up to what? 2176. The volatility is what? This is high and this is what? Low. Now see, volume and then what? Open interest, change in open interest. Everybody following or not? Now see, volume now, today totally how many contracts were traded? You purchase 30 lakhs? 31,81,000 contracts were what? Traded totally. Respond, yes or no? No. Next, in this, open interest is, what is the open interest at the end of the day? 42 lakhs 84,300. 380. Respond. These open interest at the end of the day. Everybody follow what I am saying now. The contract traded open interest has got no relation because this contracts may be traded between two existing parties diluting their position, or parties what? Creating new positions or changing hands. Anything can happen. Even without affecting open interest, everything can happen. Yes or no? Now, today, how many TCS contracts available in the futures market? 42,84,380. Compared to yesterday, the open interest increase or decrease or decrease. That means there is no more dilution in positions than what? Creation of the new position. Respond yes or no. We can understand that people are what? Booking profits and going out of the market, or just stopping their loss and entering out of the market. They feel that TCS share price has what? Reached a peak, may also what? Decrease. Like that understanding may be that. Everybody follow what I am saying. In that case, 98,390 is what? The change in the open interest. So many contracts are diluted. Now are you able to understand or not? No. About these things, that is to read all this background discussion important. Why we have discussed 1.5 class is only to help us to what? Read a quotation properly. Everybody follow what I am saying? Now, next is, and these details, bid price, offer price. That means the quantities, they have bid, not matched. There's going to be quantity, there's going to be what? Not matched, because there is no corresponding seller. Yes or no? Now, in that case, what they say is, the bid price is, highest bid price, remain unmatched is what? 2,277.05. That is, a person has given a bid order for what? 2,277.05, and till now his order has not been matched. Now, and a person has given a selling order for how much? 277.8. Till now order is not what? Matched. This is the lowest selling order. This is what? Highest buying order. There may be other orders also. There is going to be what? Beyond this and what? Below this. If this itself does not get matched, others cannot getting matched. Are you following what I am saying? See, very simple. Yeah? A person has given, say that I will buy for 2,277.05. I gave a buy order. Okay. Now, he cannot find a seller for that share for this price. Because his buying price is low, is what people felt. Now, suppose another person gave for 2,100. What happens here? If he himself could not be satisfied, then others also will not be what? Matched. So this is the buying order at the end of the day left hanging. What I am saying? Now, like that, the selling order, a person said, I will sell for what? 2,777.8. This lowest selling price cannot find a buyer. So no, in that case, I cannot find a buyer beyond the selling price. These two orders are not matched. This is information to the investors that these orders are pending. Even if you want, start from what? This price in the next day. Are you following what I am saying? And how many contracts like that? 125, and then what? 250. Like this, the buying and selling is left hanging. These orders are waiting to be what? Matched. Matrimonial person willing to get what? Married. Okay. So they'll be giving highest age, lowest age. Like that, waiting to get married. Like that. These orders are waiting to get what? Matched and still hanging in the stock exchange. Are you following what I'm saying? And this is an information for us to know from where we should start our what? Bidding in the next day to have a successful bid. Everybody yes or no? Now, ultimately, nothing great. Everything is what market? Auction market, where people auction and the transaction take place. Everybody, are you following? Now, with this, have you learned how to read a code for a futures or not? No. Mostly the options also will be having one similar code. Excel will be having some extra information like what? Is American or European option, and strike price will be given in the option. Premium should be what? Given. No. Okay. Now, give the heading fair futures price. Fair futures price. Okay. I will tell my target. When we complete, I will leave you. Okay. The target is we should complete 9, 10, 11, 12, 13 and 15. I know you are very good in mathematics, LKG, UKG, but not in CPT Max. Can I proceed? No. Can I proceed? No. Okay. Fair futures price. At least minimum 6 problems should be completed before leave you today. It can be completed in no time, please. Now, Futures valuation is very simple, nothing. What is future value? Present value compounded. What is future price here? Spot price compound to what? Future. That's futures price. Are you following? At the interest rate prevailing in the market, please. That's all. Concept of what is future price? Spot price compounded to future. Okay. Now, mostly we use what compounding? Continuous compounding, because it being what instrument? Derivative instrument. Now, in exam, whether to use continuous or normal compounding, it is depending on how they give the question. If the question gives you what? E values, I should use what compounding? Continuous. Or I have to use what? The normal compounding. Now, in our class, we will use generally the continuous compounding for compounding or discounting. Can I proceed or not? Now, see. We are now discussing about fair futures price. What should be the normal futures price? Actually, in the futures market, it may be quoting higher or lower, yes or no? In that case, a person can make what? Arbitrage profit is the issue. How we discuss about theoretical boundaries for options, put call, parity, etc. I don't know. All those complexities, nothing there. Fair futures price and this arbitrage we are going to discuss. But let's learn how to calculate the fair futures price. Okay, now I am going to find out in 3 situations. How many situations here? 3 situations. Situation 1, situation 2, and then situation 3. Very simple. See. Situation 1, no dividend. I am discussing about shares. It is going to be what? No dividend. During the futures period. Any dividend after the contract period is irrelevant. It is same as option only. Yes or no? No. So suppose there is a 6 months futures contract, means within 6 months no dividend is going to be declared. No. Second case is dividend declared within what? Futures period given in rupees. 5 rupees dividend given by the stock. 10 rupees and given in what? Rupees. Third is dividend yield given in what? Percentage. Given in yield given in what? Percentage. These are 3 types of situations here. Now this we are done in the options itself already. Yes or no? Now futures romba simple here. What is future price? Spot price into e power TR. Spot price compound for the term of the futures contract for how much rate? R% rate. Spot price into e power TR gives you what? Future price. Innappa read or not? Now this is a fair future price in situation number 1. Situation number 2. At the time, the futures price is for the ex-dividend share and the spot price is for what? The cum-dividend share. In that case, I cannot compound the cum-dividend price to our future, because by the time the future contract matures, it becomes what? The ex-dividend. Now, can you tell me what should be the formula? Exactly, it's going to be what? Revised spot price into e power TR. What is revised spot price? Spot price minus present value of dividend. Respond yes or no? No. In third case, it is spot price into e power T R minus D. I want a rate of return R for the growth in the price, but the asset itself gives me what? A dividend that is going to reduce my what? Required return e power R minus D. Something similar to what it in the currency options. Yes or no? E power RH minus what? RFC. Ennappa nyabam irukka? Now, this is the fair futures price calculation over here. Concept is what? Over. Everybody understanding it? Like this one problem has been asked for 6 marks in the exam. How many marks? Not 6 marks, 4 marks in the exam has been asked. E power T R minus D. Tell me, are you following what I am saying? Now, everything we should understand in context what it is discussing. Structure is only important. Everybody following or not? Now, this is regarding determination of what? Fair futures price. Can I proceed? Now, we are going to calculate all the 3. That is without dividend, dividend in rupees, and dividend in what? Here. Both for stock futures as well as index futures. From now onwards, hedging or index will be used. I use for stock as well as what? Index futures. The concept is same only, but index what is dividend, we will be discussing at the later stages. Are you following? Later stage means before the completion of this particular chapter itself. Okay, now, can you start or not? Now, tell me first, what is futures price? Spot price taken to the future. What is future value? Present value compounded. Yes or no? What is future price? Yeah, spot price taken to the future. I have to find this in how many situations? 3 situations. When the underlying asset does not declare any dividend, declares dividend in rupees, or it is given in what? Percentage yield. Is on what I am saying? In that case, how to find out is the issue. What is no dividend? Spot price into e power TR. Dividend means what? Revised spot price into e power TR. In percentage means what? Spot price into e power T R minus D is the answer. Now, can I start doing the problems or not? Now, write down first. Fair futures price. Write down point number 1. Future price is nothing but future price is nothing but spot price compounded to future. Futures price is nothing but spot price compounded to future. Spot price compounded to future. Point number 2. There can be 3 situations in determining fair futures price. There can be 3 situations in determining fair futures price. There can be 3 situations in determining fair futures price. Branch it into 3. Situation 1. Situation 1. Situation 2. Situation 3. Situation 1, Situation 2 and Situation 3. Situation 1, put the down here mark and write. No dividend is declared. No dividend is declared during contract period. No dividend is declared during contract period. After contract, I am worried or not worried? Not worried, because in that case, price also, spot also come dividend, and futures also what? Come dividend. In between only the nature of the share changes at the time of exercise. Yes or no? So no dividend declared during the contract period. Put the down here mark and write. What the formula? Spot price into e power TR. First formula is spot price into e power TR. Second branch. Dividend declared given in amount. Dividend declared given in amount. Dividend declared given in amount. Revised spot price into e power TR. Revised spot price into e power TR. And revised spot price, put it down and write. What is revised spot price? Spot price minus present value of dividend. Spot price minus present value of dividend. Spot price minus present value of dividend. Third branch. Situation 3. Dividend yield on underlying asset given. Dividend yield on underlying asset given. The word yield is always expressed as annualized percentage. Remember, dividend yield on underlying asset given. Generally, what is dividend yield formula here? What is dividend yield formula? DPS divided by what? MPS. Don't say face value. I already said in the dividend chapter also there are 3 rates here. One is what? Payout ratio. No. Don't get confused. Suppose there are 3 items. One is what? Payout ratio. Another is what? Dividend percentage. Third is what? Dividend yield. Okay. Suppose somebody says payout ratio of 40%. What's the meaning of that here? If I have a PAT of 100, I'll distribute what? 40 as dividend. How much will be given out of my profit is called as what? Payout ratio. No. Suppose I have to give 40 rupees dividend. For every shareholder, it works out to 4 rupees. What dividend amount here? 4 rupees. Okay. If dividend is 4 rupees and the share price is, and the share, that is face value of the share. What the face value of the share is? How much rupees here? 100 rupees. What is the dividend percentage? What is the percentage here? 4%. But the share may not be trading at face value. It will be trading at what? Market price. Suppose it is trading at 200. How much rupees here? 200 rupees. What is the dividend yield here? 2%. The company may declare 4% dividend, but the yield is only how much? 2%, because always my investment is not what I pay, but what is the current market value of investment concept already discussed in the share valuation. No, this we call what? Dividend yield. What is the dividend yield here? MPS divided by DPS divided by MPS. Dividend yield percentage is given. Everybody understanding it or not? Now, in this case, right, S into e power t into what? R minus t. S into e power t into R minus d. S into e power t into R minus d. Everybody, are you understanding this or not? Now, that's all here. Now, with this concept, another 6 sums can be done regularly. Example, in the sums are also being what? Asked. Can I proceed? Let's start doing the solution, please. Now the time is what? 9? Okay, 50. Sorry, 8:50. 8:50. 8:45. Half an hour left. Okay, in this half an hour, minimum 5 sums should be done. Can I start or not? Now. We all do it together. Can I start or not? Now. Question number 5. So question number 9. Question number 9. Sorry. TCS trades on the spot market at 1,285. Now, stop talking. Futures is derivative or normal asset? Why it is called as derivative? Future price depends on the spot price. Spot price compounded to future only becomes what? Future price. Is or no? Option also what? Derivative, because option premium depends on what? The spot price of the underlying asset. No. Always these values comes from the underlying asset only. It is called as what? Derivative. Yes or no? Now, without cash market, future market cannot exist. There's no cash market for TCS. That is a futures market not possible. The futures derives value only from what? The cash market transactions. Everybody following or not? No. So write down. Let's start doing. TCS trades on the spot market at 1,285. Cost of financing is 12% per year. What the fair value of 1 month futures of TCS? Can I proceed or not? Now, let's do the solution together. 1 second answer or 1 second or 1 minute. Okay, now. Question number, quickly. Question number 1. Okay, write down, please. Fair futures price is equal to, in exam, write the full thing, don't write abbreviation. I write here, FFP means what? Fair futures price is equal to what? Spot price into e power TR. Spot price into e power TR. Sorry, is equal to, what is spot price? 1,285. 1,285 into e power. How many months future? 1 month. I want to find out 1 month forward price now. 1 by 12 into what? 0.12. Please. 1,285 into e power 0.01. In a port 1,285 into 1.01 005. 1.01 005. Multiple and tell me what the number? 1297.91. 1297.91. Yes, question number 9 answer is the fair future price. Now, suppose in the futures market, I find the TCS is selling above this or what? Below this. What can exist here? Arbitrage can exist. And we can see how it can be made in the later stages. Just, finding out the fair future price also. Or you'll find out anything. Now, next is question number 10. Question number 10. Please. The Nifty is standing at 5,500. Please. And the cost of financing is 12% per annum. What is the fair value of 1 month Nifty futures contract? Today, NSE index is how much? 5,500. It is a spot index. It is what? Spot index. Can I buy the spot index? But can I buy and sell futures index? Yes. Now you want to know what should be the futures index. It raises value only from what? Spot index. So it is how many months futures here? 1 month future. Same question. Can I proceed? Now, question number 10. Write down. Fair futures price is equal to spot price into e power TR. Fair futures price is equal to spot price into e power TR. What is spot price? 5,000. 500 into e power, I think r is 0.12 into t is what? 1 by 12. 1 month future now is equal to 5500 into e power 0.01 is equal to 5500 into 1.01005. What number? 5555 point. What number? 5555.28. 5555.28 is the futures Nifty price. Everybody following or not? No. Is the fair futures price for the Nifty futures. Can I proceed? No. Take question number 11. TCS trades on the spot market at 1,305. Cost of financing is 12% per year. It is expected to have a dividend yield of 2%. What is the fair value of 1 month's futures on Tata Tea? Okay. Suppose Tata Tea is a company name. Yeah. Can I proceed? First, suppose a person buys a Tata Tea share for 1,305. Answer my question. 1,305 and 12% is a required return. Tell me, should a price go up by 12% down? No. Because on that you can earn how much yield? 2%. What is required to be earned from the price rise is only how much? The balance 10%. Yes or no? Now, suppose the yield is more than what? The interest rate. What happens? It will be trading at a discount. Something similar to IRPT forward. Real fun what I am saying now. Can I proceed further? Now, next. Question number 11. Right, question number 11. Please. Write down. Fair futures price is equal to spot price into what? E power T R minus D. Fair futures price is equal to spot price into e power T R minus D. What is spot price of Tata Tea? 1,305 into e power. Just a minute. How many months futures given? 1 month. Okay. Into e power. T is what? 1 by 12 into R is what? 12%. D is what? Minus 0.02. Which is equal to 1,305 into e power 1 by 12 into 0.10. 1,305 into e power. Tell me what is 1 by 12 into 0.10? 0.00833. 0.00833 or 0.00833. Can I proceed? Now. 1,305 into 1 by 1.00. Oh, sorry. Compounding na. Okay. 1,305. Good morning. 1,305 into 1 point. Accepted. 1.00834 apa? 836 ma'am. Okay. 836. 1,305 into 1.00836. Tell me what is the number here? 1%. 131. Okay, 1316. Accepted. Okay. 1316. 1316. This should be the fair futures price. Significance of this price can be seen through the arbitrage later. Everybody follow or not? No. Question number 11 has been completed. Now please take question number 12. Okay, please. Now, a share can declare dividend. Can Nifty declare dividend? That is a question or not? Yes, it will. When the shares constituting Nifty declares dividend, Nifty also can declare what? Dividend. Nifty is nothing but a portfolio, market portfolio. If the share in a portfolio declares dividend, the portfolio also declares what? Dividend. And how much Nifty declares dividend will be published by the stock exchange. Are you following what I am saying? Now, we'll discuss more deep about this in the next class. Understand that how a share can declare a dividend, the portfolio also declares what? Dividend. Now only I am going to discuss about swaps valuation. Everything is going to come. Are you following? Now, everything is new to you also. I cannot leave anything. Can I proceed, please? Now, can Nifty declare dividend or not is the issue. Nifty will not declare dividend. It's only a point. But the shares constituting Nifty, what is Nifty? It consists of 50 company shares. Yes or no? No. That's the selection process for that. In that case, if the shares in the Nifty declares dividend, it means what? The Nifty portfolio has given what? Dividend. And how much dividend Nifty declares, we need not worry about that. The exchange what publishes the dividend yield on the Nifty every now and then. Everybody following what I am saying? Now, come to this. We'll come back to the discussion later more deeply. Let's only do the calculations now. Okay, now question number 12. Suppose stock index has a current value of 5,500, risk-free rate is 8%, expected yield is 2%. What should be the price of a 6 months maturity futures contract? Respond yes or no? No. Very simple. Let us quickly complete it. Question number 11 or 12? Right, question number 12. Please. Question number 12. Fair futures price is equal to spot price into e power t r minus d. Spot Nifty 5,500 5,500 into e power 6 months 6 by 12 into what is r? 0.08 minus 0.02. 0.08 minus 0.02 is equal to 5,500 into e power, net it off 0.06 into 6 by 2 is how much here? 0.03. This even child knows 5,500 into what? 1.03045 or 05 as the case may be. Yes or no? Done so many number of times the options la, right? Now, I'm like continuously come on a table by heart. Can you say now? Tell me what the number here? 5,000 5. Tell me the number. What is the number? 5,667. Okay. Now, question 13, I will do in the next class. Homework lab. It is one of the exam type of sum. I'll do in what? Next class. Let's take question number 14, 15 will complete now. Take question number 14. Lot of time is left of 15 minutes. I can do even 3 more problems. Can I say now? Question number 14, please. 30 will be done in the next class. Okay, question number 14. Stop talking, please. Suppose that there is a futures contract on a share presently trading at rupees 1,000. What is trading at 1,000? Doubt English la, okay. Suppose there's a futures contract on a share presently trading at 1,000. What is that? Share is trading at 1,000. No. Now futures contract price you have to find, yeah, correct? So there is a futures contract on a share which is presently trading at what? 1,000. 1,000 should be linked to share. Okay. Now the life of the future contract is 90 days. During this time, company will pay dividend at 7.5 in 30 days. 8.5 in 60 days and 9 in what? 90 days. Good company. Can I say now? Assuming that compounded continuously risk-free rate of interest CCRRI means what? Continuously common rate of interest of 12% per annum. You are required to find out fair value of the contract if no arbitrage exists. Value of cost to carry I will discuss after discussing convenience yield etc. later. Okay. Part B, we can leave a blank and answer later. We can answer only what? First part, there is a fair value of the futures contract. E computation need not be done. Is given in what? Question itself. Past examination problem. Can I proceed or not? Now. So now we have to find out the fair futures price. All of you tell me what is fair futures price? So what is revised spot price into e power TR? Yes or no? What is revised spot price? Spot price minus present value of dividend. How many dividends here? 3 dividend. Present value of dividend 1, dividend 2 and dividend 3. Ennappa right or not? Now, dividend, that is what the interest rate? 12%. Dividend 1 happens what? 1 month, 2 months and then what? 3 months. E power 0.01, e power 0.02, e power 0.03. All these are e power point minus minus. Anything less than 1 is what? Discounting has been given. And e power 0.0 is given for what? Compounding. All e numbers are given. Ennappa purinjudha? Can I start doing the problem together or not? Right on. First, step 1. Step 1, calculation of. Step 1, calculation of. Tell me the question number, please. Calculation of revised spot price. Step 1, calculation of revised spot price. Okay, first, present value of dividend 1 is equal to, present value of dividend 1 is equal to, what is the amount here given? 7.50 into e power, I think after 1 month, 1 by 12 into 0.12. Okay, minus 1 by 12 into 0.12, exactly. 7.50 into e power minus 0.01. E power minus 0.01. You need not do, question has given you the factor, 7.5 into 1 of you, tell me 0.905. 7.5 into 0.9905. Tell me the number here. 7.43 actual number, 7.43. Present value of dividend 2. PV of dividend 2. What is dividend 2 amount? 8.50 into e power minus, after 60 days, 2 by 12 into 0.12. 8.50 into e power minus 0.02 is equal to 8.5 into point. Tell me the number here. 9802. Tell me the number. 8.33. Present dividend 2 is 8.33. I hope you are all following or not. Now, next, present value of dividend 3. Present value of dividend 3. What is dividend 3 amount? 9 rupees into e power minus 3 by 12 into 0.12. 9 rupees into e power minus 0.03 is equal to 9 rupees into point. Tell me the number here. 1%. 97045. Given the workbook, 0.97045. Tell me the number. 8 point. 8 points. You are dealing in 2 decimals now. Don't show the third. 8.73. Can I proceed? Revised spot price. Yes. Spot price minus PV of D1 minus PV of D2 minus PV of D3. Now, what is the spot price of this share? 1000. Okay. 1000 minus, what is the present value of D1, D2, D3? 7.43. 7.43 minus what? 8.33 minus 8.73. There at the top, no? 8.73. What's the number? 975.51. 975.51. Now, step 2 is what? Fair futures price. Step 2 is fair futures price. Revised spot price into e power TR. Revised spot price into e power TR. What is the revised spot price? 975.51. This is going to be the ex-dividend price, which is going to be the share I'm going to get on the maturity date. Yes or no? 975.51 into e power. How many months futures? 3 months. 3 by 12 into 0.12. 975.51 into e power 0.03 is equal to 975.51 into 1.03045. What's the number here? 1005.21. 1005.21. 1005.21. This is a fair future price when dividend is what?